Hey, what is up everyone? It's Abdullah. Welcome back to the channel. Right, as you guys know, I'm already in Malaysia right now, and I was supposed to be in Ghana on Tuesday, but I decided to extend my stay. In today's video, I'm going to be showing you one of the most beautiful things that I have seen on the market that is not in any book, that has to do with simple support and resistance. But before that, take a look at my view from this point. This is incredibly beautiful. This is incredibly beautiful. I'm also going to show you guys what my Airbnb looks like. But in today's video, this is going to be my working area right from this point, and I'm going to teach you just some really few things that I've mastered on this market that can really take your trading even to the next journey. So without further ado, let's just dive right into the chart and let me show you what I have to teach you. I'll see you guys. So if you open up your chart, right, I need you to understand something. When you are looking out to identify areas of strong support and resistance in the market, you realize that most of the time when the market has created something like a resistance, right, and then we see the market coming into that area of the resistance, usually we see the market will come, retrace from that particular point, form some kind of double top indication, and then reverse again. However, this is textbook knowledge. If you are able to delve into the charts and try to understand it, you realize that we have something that is formed by the whole candle of the market, which is what? The body, the wick, and then the whole candle is itself. All right, now if you look at this particular chart right over here on the daily time frame, this is gold on the daily time frame, you'd realize that the market on the daily time frame wicked in this particular area. However, if you should come into the 4-hour time frame, you realize that this particular area right over here strongly closed above. Now, most cases, everyone is going to think that fine, this resistance has clearly been broken, therefore we should expect some movements of price from a retest area even into the buy side. However, in today's video, I really want to teach you guys how to identify if this area has been strongly broken or not. So let's delve right into it. Now, one of the key things I've learned over my period of time, and I would advise you to backtest it. If it works for you, great. If it doesn't, you trash it. Is that most of the time, the very first thing that we need to do is that we need to mark our resistance with a horizontal ray line or a trend line. So for example, a horizontal ray line or a trend line. Now, we want to be marking this on the highest wick. So if we are to come to, say, this particular area on the market, we are going to be marking it. Let me just have this particular area like this. We are going to be marking this resistance, or I'm going to be using my horizontal ray line like this. Now, the whole idea is that we are expecting the market to come into this highest area in the market and then retrace from this point. However, when we see the market coming into that particular area, we realize that there's going to be a strong movement that's going to break above. However, we do not trade on the daily time frame. So let's say we came to the 4-hour time frame. How are we going to find an opportunity? Why were we not going to be looking for buys, and why were we going to be looking out for sales? Here's the trick. You want to be looking out for price when price are strongly broken. Now, usually when price are strongly broken over a resistance, right, we usually wait for price to retest that particular area and give us another strong bullish indication. But in most cases, when the market breaks above a particular resistance and closes below that particular resistance within the first 1 to 3 candles, meaning that if price should break above this resistance and the next candle comes to close below this line, it's an indication that this market is still bearish. Or if the first candle comes, doesn't close, second candle comes, doesn't close, but the third candle comes close, it's still an indication. From the fourth candle going, it's not really a strong indication for the continuations of sales in this market. So let's see on the 4-hour time frame. On the 4-hour time frame, we spot a very beautiful closure, which also indicates a bearish indication in this market on that particular key area. So over here, most of the time, I'll have my stop loss right beneath this structure, but this is on the 4-hour time frame. So if I'm to scale down to the 1-hour time frame, I'm going to be having my entry right at this particular area, and I'm going to be giving a significant risk to reward area. So let's see this particular area. Now let's see how this particular trade goes out. Now, I know some of you will probably be thinking, oh, this looks really simple, and then what shows that this also works all the time. All right, so we are going to be looking for other examples on the market, and let me teach you guys. So I can spot another beautiful opportunity right over here around the daily time frame, right, which I'm going to be marking again. So now you can see this wick area. I'm going to be marking it beautifully. Now all I need to do is to be waiting for the price of this market to actually come into this area. So as I'm patiently waiting for price to come into this area, I am scaling down to my 4-hour time frame. All right, so my 4-hour time frame, I'm waiting to see the reaction. Now, what do we guys see on the 4-hour time frame? We saw that very strong closure, right, which indicates a break. However, the next candle was what? A very strong bullish candle. However, if we were to scale down to the 1-hour time frame again, we're going to spot what our same entry right around this particular area in the market. So meaning that if we're supposed to go long on this market, we're going to have a stop loss right beneath this structure and then go forward a significant risk to reward. Now don't bother about a stop loss, because this is something I just want to teach you about resistance and then this kind of entries. Right now, let's go for a good risk to reward of at least 1:2, and let's see how this plays out. So you can see I'm going to play this quickly, and eventually this particular trade hits our potential TP of about 500 pips. Right now, let's look for more opportunities. I just want to explain to you and show you guys how this particular system works. Now, for the cases where it does not work, you're going to realize that this particular pattern is not formed on the daily time frame. Again, there is another wick entry over here. Right now, if I'm to start scaling on the market and I should come to the 4-hour time frame, you realize that even after the break, the first candle did not close above, the second candle did not close above, the third candle did not close above. Therefore, this invalidates my setup. That means this particular setup is not going to fall into that criteria of looking for that strong reversal on the market. Then again, let's look for more opportunities, and which will be the last one, and I will show you guys what more we can do. So we are going to be looking on this market, looking out for beautiful weak areas in the market where we can look out for clear areas of support and resistance. Good. So again, I'm going to be having this particular area on the market. I'm going to be having this area on the market, right? This particular area. Now this is the wick area in the market. Now I'm basically waiting for price to come into this zone. Now on the daily time frame, it looks like a strong close. However, if you come on the 4-hour time frame, this is what it looks like. Now let's see. On the 4-hour, the first candle forms, the second candle forms, and the third candle forms, right? However, at this point, we cannot take this particular trade in as much as it looks good, right? We cannot take this particular trade. Why? Because it violates our entry criteria. In as much as this trade can actually play out, right? This trade can actually play out. However, this invalidates our setup. We want to be looking for at least the first 3 candles to close below that particular zone, right? So we are going to be looking for another clear example that qualifies us. Alright guys, so this is also another very beautiful area. So we are going to be marking the highest wick in the market, and we are waiting for price to come into that zone. Now this is on the 4-hour time frame. I will just be waiting for price to come into that zone. Now as I'm waiting, I'm looking for that strong break. However, the break is not always going to happen. Now watch what's going to happen over here. We see that price comes into this area. We see a very strong rejection in this particular zone on the market. Then what happens right over here again? We see strong bearish indications starting to form. If you were to scale down to the 1-hour time frame, this is how it's going to look. Right over here, we can spot a very beautiful opportunity for us to go short on this market and have our stop loss right above the structure and go for a significant risk to reward, which is about 1:2.3. Now let's see how this particular trade plays out. So you can see the market is finally trickling down into our way. Now this is a very beautiful way to actually find out sniper entries on this market and make significant gains on this market. So if you like this video, make sure to hit that subscribe button, like, and leave a comment, and also make sure to join my Telegram community at MarketGod community, and also join my trade with me every single day at Pay MarketGod, right? Make sure to use this opportunity so we can make some pips together for ourselves. I'll see you guys in the next video. Peace out.